Start the video recording. This is the midterm review session in Unit 7 at Principles of Individual Income Tax at Newberry College in the fall of 2022. And today's date is October 5th, 2022. Okay. Have a couple of announcements. Aaron Judge finally hit his 62nd home run last night, and the the fan who caught Aaron Judge's 62nd home run revealed his identity and gave an interview to the Sports Illustrated magazine journalists who were there waiting for that event to occur. His name is Corey Humans. And he's one of the most foolish people in the world because while he got his 15 minutes of fame and a lot of interviews on MLB Network and some of the other ESPN, he also is now a target for the IRS to tax him for $2 million in taxable income, regardless of what he does with the home run baseball. There's a collectibles company called Memory Lane that has already offered him $2 million, and probably the price will go higher. But congratulations to him for catching the ball, but now he's made it virtually certain that he's going to have to sell the ball in order to pay the tax on it. So anyhow, that's a little bit of tax news in the world today. Let's see, good. I'm publishing my video for my managerial accounting midterm review. Sorry, I still have that going on my computer. Let me go back to your class and let's review your coursework. So what I did for today is I came up with, as promised, we're just looking at chapters 1 through 6. So in your syllabus, it says that the midterm is going to cover chapter 7, but this midterm will not. Okay, remember, I'm going to go up to Charlotte tonight. While I'm up there, I will record a lecture for chapter 7 that will replace the 2 classes for Wednesday and Friday of this week regarding chapter 7. So I'll get through the second half of that chapter and also talk about some of the greatest hits of the first half. And then I'll post that for you. But then next week, we will probably have a brief review of chapter 7, but also get into chapter 8. We're working our way through the tax form. So we started back with, in chapter 1, we started with what was a tax, introduction to it, and why is it important, and different types of structures and systems. And I don't think, well, you could get a question similar to the homework that I had that I'm finally giving back. Those of you who did the marginal and average and effective rate tax questions. I mean, I could have a question like that. That could be a problem on the exam. So think about that as a possibility. And then there's, might be a multiple choice question about progressive versus regressive tax rate structures and the types of taxes, if they're federal, state, or local, that sort of thing. But that's how we started the semester. Then in chapter 2, I also don't see much likelihood that we would have a problem on this chapter. This is the one that talked about tax compliance, about filing requirements, statute of limitations, the audit selection process, and the Golson rule. And there could be a multiple choice question about any of those 4 topics. The filing requirements are talked about on beginning at pages 2-2. Statute of limitations is on also beginning on pages 2-2, and The audit selection process begins on page 2-4 and continues for a while, and then the Golson rule is mentioned on page 2-9. So these are all important topics that are probably testable, but I'm not sure that the rest of it on tax research is something that I'm going to test. So I think we're going to learn tax research by doing the problem that we're going to assign during the next part of the class. Probably have that due sometime. We'll assign it maybe the middle of this month and have it due in the middle of November. And that'll be our major research project. And that'll be about that case we talked about, the one that involves the person who claimed innocent spouse status and the IRS wouldn't grant it. So that's chapter 2, okay? So statute of limitations, audit selection, Golson rule, those were kind of the key concepts that were in that chapter. So let's go on to chapter 3, and in chapter 3 we're starting to identify some tax planning strategies. Now, one of the concepts that could be taxed as a problem might be a problem about calculating present or future value. So time value of money is an extremely important concept and one that all of you should be intimately familiar with by the time you're finished with this course, because it's important in terms of calculating, when to time the receipt of deductions or the expensing of deductions or the receipt of income when you have a choice to do that. And so that's an important part of tax planning, but it's also an important part of all business planning. So present value that's on page 3-3 is an extremely important concept. So are the timing tax strategies, and just to know the 3 basic types of tax strategies, which are timing, right? And also the ones that involve, which taxpayer recognizes the income. And then third, the possible conversion strategies. Can you convert ordinary income into capital gains? Can you convert a deduction that otherwise would be limited into one that's not as limited? So those are our basic tax strategies that we learned in chapter 3. Timing, income shifting, and conversion. In chapter 4, we started to get into the tax return itself. We started to see whole pages in the book that were just copies of the tax form with some of the information in the examples shown on the tax form. So they were starting to show us how do we complete the Form 1040 with the information that we're given. And so, I can't really get you to do a Form 1040 in 50 minutes for a midterm exam. It might be a good topic for perhaps a take-home final. But for this purpose, the first overview lesson that we had on the Form 1040 form itself dealt with identifying dependents, when you can take a dependency deduction for people that you support, and filing status. So, determining what your filing status was. So there may be some questions about that. Other topics that were important in Chapter 4 were the realization doctrine that started on page 4-2, the list of exclusions and deferrals from income on 4-5, and the concept of above the line and below the line deductions. Now, what's the line? Well, the line is AGI, it's adjusted gross income. So you have some deductions that you get to take above the line, and they're used for the calculation of adjusted gross income, and then some deductions that you have to take below the line. Okay, and those deductions that you take below the line come out of adjusted, they come from adjusted gross income, and they go into the calculation of taxable income. Okay, and they're usually subject to more restrictions when they're below the line than when they're above the line. They're more valuable above the line than they are below the line. So that was our first introduction to that in Chapter 4, and we learned a bunch about that. Let's see. Let's see what else we need to talk about here. That's pretty much it. Okay, so then we went on to Chapter 5, and we had our example that began in Chapter 5 of Courtney, who seems to have one of every type of income and one of every type of deduction, fortunately for purposes of studying this stuff. And in Chapter 5, we could easily have a problem that involves getting a list of various types of income from a taxpayer like Courtney, and then trying to determine which is includable in gross income, which is excludable, and which is deferred. And so that might be a calculation that you're asked to perform as a problem out of the material that's in Chapter 5. Or perhaps we looked a couple of times at the formula for calculating the exclusion ratio for an annuity income. So that's maybe a less important topic, but it's also one that lends itself well to a problem or perhaps a multiple choice question. So those are some of the good topics. And then also annuity income is discussed, I think, beginning back on about page 511, 5-11. And then also one of my favorite sections of the tax code is the exclusion of gain on sale of a residence. And so you could have a problem on that too for that. And that discussion begins on page 5-22 and continues on after that. So be aware of that. And then as far as multiple choice questions in Chapter 5, be aware of a lot of the limits on deductions. Well, actually, that's Chapter 6, but be aware of the tax benefit rule and how the tax benefit rule interplays with the state and local tax deduction. It's limited. What's the limitation on state and local taxes per year per taxpayer? It's $10,000. Okay, $5,000 if you're married filing separately. So it's a very low limitation. Most people, who have relatively high income and want to itemize, have more than $10,000 that they pay annually in taxes at the state and local level. So it's deductible, but it's deductible subject to a limit. So if you were limited in the prior year, then when you get your state tax refund or you get some other tax refund, you're probably going to be limited in the amount of income that you have to take and recognize into gross income because of the tax benefit rule. So the tax benefit rule can help you when you're getting a refund of something that wasn't previously deductible. Okay. And then there could be a question on cash or accrual method, different types of accounting methods, constructive receipt, which is on page 5-7, along with cash or accrual method. That's also a topic that's ripe for a question. And calculating capital gain on beginning on page 5-13. So those are all areas in which you might want to think about giving it some extra preparation. Then in Chapter 6, there could be kind of a converse problem for Chapter 5. We could have a list of somebody like Courtney who has lots of different types of deductions, and then ask you to calculate the amount of her total itemized deductions and to compare it to her standard deduction and see whether it's worthwhile for her to itemize. So that's another important calculation that you have to make, and it's one that kind of lends itself well to a problem. So, or there could be an example about there could be a problem that involves bunching charitable contributions, or just about if you look at Exhibit 6-9 in your book, there's this crazy list of all the different types of charitable contributions that Courtney has, and how much they're deductible based on different percentages. And so I could ask you just to list, which deductions, which charitable gifts that you make are deductible, and what limitations are they subject to, something like that. Now remember, this test is testing a lot of stuff that's kind of complicated and picky, but it's also important information. These are the most important things that you're going to need to know if you continue with taxation as something that you want to pursue. And so I'm leaving out a lot of the stuff that's just kind of, the only way you can learn it is by doing it or by going through the form. Yes, Ms. Bayless?
So you have these like formulas and everything like that memorized?
No. This is all open book.
Okay.
This is all open book and open notes. Now, one thing you can't do is you can't I don't want you to be sitting in class, on your computer and, start watching this video in the middle of, okay, so don't bring a friend in to help you, okay, don't watch any videos, but you can look at anything that's posted, in the course materials, and look at all of your course book, and I'm not taking any of my questions out of the course book, so these are all fresh questions where you won't be able to look up the answer, but you'll be able to look up a question in your course materials that's just like it, only you'll have to substitute the numbers in and make sure you understand the calculation to perform. Yeah.
How many questions is it?
I'm not certain yet. I'm thinking that because the problems, I was thinking originally about somewhere between maybe 12 and 17 questions, but now I'm leaning more towards 12 because I think I'm probably going to have fewer questions about the chapters that we're testing with problems. So there are some concepts that don't lend themselves well to a problem, but maybe I'll take out a question from a previous chapter to make room for it. But there's probably going to be 12 multiple choice questions and 3 problems. Okay, so we've gone through about 5 or 6 topics for the problems, and probably about 20 possible multiple choice questions. But I don't think you'll have time to do it in 50 minutes if we have too many multiple choice questions. So they'll try to be very straightforward. We'll do multiple choice first. It'll be like a big quiz. Except you're going to do it here in class on your computer and just submit it that way. So, and I'll be here on Friday.
Is it going to be on Wolf Den?
It'll be on Wolf Den. Yeah, it's just going to be a big quiz. It's just going to be a big quiz. So you'll come into class on Friday, and I'll release the quiz right before class starts, and then you can, sit here and do your answers. And I'll leave room. I'll make all the answer segments for the problems large enough that if you need to, if you feel like you need to do it in Excel or Word or something like that, you can copy and paste into Wolf Den your answers, that sort of thing. So it's going to be straightforward. It's going to be open book and open note, but it's going to be rigorous enough that if I'm going to take it after I get finished writing, okay, and if it takes me more than 20 minutes to do the problems, then I'm going to have to maybe drop it down to 2 problems, okay? But so that way you'll have enough time to go through probably finish it in 30 to 40 minutes and then have some time to review your work before you submit it. So, okay, now let's take a look at marginal average and effective tax rates. That's one of the ones that we identified as a possible good topic for a problem. Or wait, did I finish with 6? Yeah, I think we're finished with that. Yeah. Oh, also about Chapter 6, just if I haven't previously mentioned it, bunching of deductions as a tax planning technique. Be familiar with that, particularly as it applies to charitable contributions. Okay, now I've covered it all. Okay, let's go back to Chapter 1, and let's take a look at marginal tax rates. And remember that we had the example, our heroes in Chapter 1 had Bill and Mercedes, and they had $160,000 in taxable income and $10,000 of non-taxable income, and we took them through their marginal tax rate. And the marginal tax rate is calculated a couple of ways. Sometimes when we talk about what is their marginal tax rate, what we're really saying is what tax bracket are they in. So remember that we had that discussion about marginal tax rate. So sometimes marginal tax rate and I don't think that our students watching video need to hear the very, very energetic lecture across the hallway. Marginal tax rate sometimes just means the tax bracket. And if you remember for Bill and Mercedes, with their $160,000 of taxable income, that put them squarely in the 22% bracket. Okay? So that's where they were. And of course, that would be the amount of additional tax that they would incur up to $178,000 and change, I think was the bracket, like $178,450 or something like that. That's where the bracket jumped up to 24%. But if they earned another, $18,450 at income, their federal tax rate would be 22% because they're in that tax bracket. And then if they earned another $30,000, then the first, $18,000 and change would be taxed 22%, and then the excess above that, up to $30,000 would be taxed at 24%. Okay, so that's marginal taxes are also defined as the change in tax over the change in taxable income. And that can go up or down. So for Bill and Mercedes, remember back in Chapter 1, they were up toward the top of the 22% bracket. So they could have had a lot of additional deductions that would have given them a 22% tax benefit for federal taxes. And so, it's either the increase in tax over the increase in taxable income or the decrease in tax over the decrease in taxable income. But if they'd had some huge loss, if they'd had a $100,000 loss that got them down into a lower tax bracket, then their marginal tax rate on that additional deduction for the loss would have probably been some blended rate of the 22% bracket. And then when they dropped out of that into the lower bracket, you'd have to calculate what the new tax was, do the difference, calculate the change, the delta in the taxable income, and then see what the change in tax is. And then they have a marginal tax rate for that deduction that was blended between those two rates. Now, given that you've only got 50 minutes to do your assignment, if I talk about the marginal tax rate, it's probably just going to be the tax bracket, okay? So I think we'll put the number squarely in the middle, so we only have to assign one rate to it. You don't have to keep, doing all these crazy equations that we did in class when the tax bracket would change. Now, what about their average tax rate? Well, the average tax rate is their total tax. Wait, I can't do it down here. I have to go back and do it over here. They can't see it on the screen. Okay, so the average tax rate, see this, average tax rate. Somebody in the back of the class, please close the back door. Equals total tax over taxable income. So this is the calculation that we exclude the income that's excluded or deferred. So if we have income, we can have income that we don't have to recognize for one reason or another, because it's municipal bond income or for some other reason. That doesn't go into the denominator, that doesn't go into the base. But taxable income goes in the base and total tax, and we do the calculation here, and that gives us our average tax rate. And you distinguish that from the effective tax rate. The effective tax rate is, again, your numerator is your total tax. But now your denominator is total income, taxable and non-taxable. Okay, so if you have to do those equations, just know these formulas cold, okay? Know this cold so you don't have to spend a lot of time looking it up, okay? You get marginal tax rate, average tax rate, effective tax rate, okay? You may get a problem where you have to answer all three for the same set of, same set of numbers. Okay, I'll leave that up for a while. I see some people are taking pictures. I'm recording this and I'm going to post this in Wolf Den. Okay, so I'm recording this whole thing. Hopefully everybody can hear me, and hopefully the board captures what I've written up there. Let's just take a look. I have a little peek and see. Yep. Okay, we're good. All right. Okay. Yeah, let's stay logged in. I don't know why Wolf Den wants to kick you out so soon. Okay, so everybody got that? Let's go on to, let's see, where should we go here? Present value. Present value of a payment. We've got the future value divided by 1 plus the rate to the number of periods. So that equals present value. So if you're going to get $1 next year, and your rate is 5%, and you take $1 and divided by 1.05, and that gives you somewhere around, 96 cents. 96 plus something. So that's present value. $1 today is worth more than $1 a year from now. Important concept and something that we should know. So hopefully those of you over here got to see that as well, and it's explained even better in your book. And I think for purposes of this class, since we're usually just planning from year to year, let's just assume that the number of periods is always going to be just 1, okay? Which is going to make the calculation a lot simpler. So, it'll be a year-end planning kind of question. Okay. All right. Now, Chapter 5, it's probably easier to sit down to do this. In Chapter 5, it begins with smiling Courtney, the income goddess, who has got more revenue streams than anybody in the world. Probably what you'll do is you'll get a similar problem. So if I do pick this one as one of the problems, then I will give you the numbers for salary and medical and life insurance and retirement contributions and interest-free loans and performing bonuses and performance bonuses and alimony and child support and consulting income and dividends and state income tax refunds, and then just let you calculate what her, what her total gross income is. Okay, so what her gross income is. So that's so you'll have to know which types of income are deferred or excluded, and and just which to include and which not to include. So that's that's basically chapter 5, but we can't cover all of it. So I'll probably have to pick the top 6 or 7 income sources since it's only a 1-hour exam. So so that's chapter 5, and then for chapter 6, we're still dealing with Courtney, and she's found a way to spend all this income, and she's got a lot of deductions. And so probably what we'll do for this is if we do this as one of the problems, then what we'll do is we'll list some of the deductions that she might have, and then we'll have to determine a couple of things. One is it above the line or below the line? Okay, so that's, are we going to deduct it in calculating adjusted gross income, so it's a for AGI deduction, or is it a deduction that we're going to have to take below the line out of or from AGI in calculating taxable income? And so that's that's probably going to be something I won't make you fill it in on the form, but I may make you just do a calculation that you can do by hand or do in Excel or on your calculator and submit that. So that's that's that. Then I may have you determine whether or not it makes sense to itemize, but all that information can be in the problem. Okay, that's pretty much what I had prepared for today. We're only 30-some minutes into the class period. Who has some questions for me?
Maybe we can have an early break to prepare for midterm.
A what?
You can send us back early to prepare for midterm.
Oh, okay. Okay. Well, if we have a second midterm, maybe we'll explore some alternative ways of doing that. I think I think it's time. Once we get through the tax return, we've got one more chapter to go. If we go back to the syllabus, we've basically got one more chapter in your book to get through. Chapter 8 is the individual income tax computation and tax credits. That gets us to the end of the tax return. So maybe at that point we have, kind of a comprehensive, exercise on the tax return, and let that be sort of our second, take-home problem. And then we could do that either individually or we could do it in teams. We could, put together teams of maybe, 3 or 4 of you, and then have some presentations about that. And then that way we could have kind of an oral substitute for some of the stuff that we've had to, do with lectures and homework. And that might be more fun. What I'll do is next time on Friday when we have the exam, I'll bring a box. We'll call it the suggestion box. And if any of you have suggestions for how we can make the course better or more interesting, you can submit them anonymously if you want to in the suggestion box. I'll leave the class for a while during the course of the exam, and anybody who wants to can put in a suggestion, and we'll look at those. I'm not saying we'll adopt all of them. If the suggestion is, hey, let's not go to class anymore, we probably won't adopt that one. But I'm certainly open to whatever suggestions you may have that would help the class. We're basically halfway through. Those of you who have contacted me about grading things that have been emailed, I will get all my grading done. I just have had so much stuff going on that I haven't had a chance to do it yet, but we've got a hard deadline coming up, I think, of next Tuesday when your midterm grades are due, and so I'll have all of your projects graded and back to you. And I've opened up, there's a few of you who were out of town. Some of you were representing the college in various activities, and a couple of you have had some medical issues, as I have. And so I'm going to open up, I have opened up everything through Chapter 6 to be submitted by this Friday. I need to get it by Friday so I can do my grading over the weekend. But if you missed the quiz deadline last night, I'll reopen that as well till Friday. So I want you all to catch up and get everybody on the same level so we can go into the second half of the class at the same pace. And good luck on your midterms. I will be here to proctor it myself, and I will have a couple of copies, but not many, for anybody who needs to take it by hard copy, although I would much prefer to get it in Wolf Den, because Wolf Den allows me to correct things that are wrong. If I write a question that's too hard, too difficult, or perhaps I've mismarked the answer key, it pops right out in the test analysis that I get in Wolf Den. So in one case this semester, I manipulated the multiple choice question around so many times that I forgot to check that I still had the box for the correct answer checked for what was really the correct answer. And all 16 of my students in managerial accounting in the first section got exactly the same wrong answer. Now, when that happens, some teachers might think, oh man, they must all be cheating. But in this case, it was operator error by the professor. And so we had to add a point back, but that was a pretty easy point to add back to everybody's grade. And so that's why I like to get it in Wolf Den, just because I can kind of also see how you all do relative to each other on the different items, and see what I might need to emphasize for some of you. So it's a small enough class where we can have personal interaction if you want to. I'm here Monday afternoons and Friday afternoons. I've got to go up to Charlotte tonight, so I won't be here this afternoon. But if you need me for anything, send me an email, and I'll get back to you as quickly as I can. Given some of the other issues that we have pending in some of my other activities, as well as my other responsibilities on the faculty. I've got to get my proposal in for the VITA course, the VITA training course for January, and that's probably overdue now. But the IRS didn't open the program for this year until Monday, till 2 days ago. So I haven't been in touch with anybody at the IRS since then because I'm still a partner in a law firm, and a lot of the transactions I've worked on are closing now, as everybody's trying to get their deals done before the interest rates go even higher. So anyhow, that's winding down. But if I've missed something, feel free to send it to me again. If I seem to be ignoring you, just be the squeaky wheel so I see it. Okay. And
I don't know if the stuff you opened is like you sent us back the answers, but it's not like able for us to redo it or like do it if we didn't do it. Like it's not open correctly and looked at. Unless it's just me.
When I reopen it, it's just reopened for people who haven't taken it, right? Yeah, I think what happens is when I reopen an assignment, the Wolf Den asks me, if I'm going to change everybody's grade, or if I'm just going to allow people who haven't taken the exam yet to take it. And I typically will say it's just, people who haven't submitted their quiz yet or haven't submitted their homework yet that I reopen it for. But I've tried to post some sort of response in your materials to the quizzes and the homework. So, I have a quiz review video in there for some, and homework reviews where I have the suggested answers.
I saw all the response stuff. I just didn't know if you were reopening it for us to redo it if we got bad on it, or if it was just you're reopening it to do it.
Well, if it's only a 10-point assignment,